In the West, where a resurgent China-powered leading technology industry is widely regarded as the key strategic challenge of the 21st century, China's drive toward technological independence has raised alarm bells. But all too often, these anxieties fail to take into account the internal challenges Beijing faces in its quest for technological dominance. One of them, which is incredibly low-tech, is the pervasive feeling of social and professional stagnation. The king of short selling, Michael Burry, who foresaw the dot-com bubble and the 2008 recession, is currently forecasting the biggest market crash in U.S. history. Burry recently issued a warning regarding a wide range of indicators that could be pointing toward an impending market crash. But in today's video, we're going to just objectively present and analyze the implications of China's situation and inform you about the serious risks ahead. So stay tuned and watch the video till the end. Don't forget to subscribe to our channel if you haven't already. Let's begin. From 2000 to 2008, Michael Burry averaged a return of 28.6% per year, and from 2016 to the present, a return of 22.8% per year. Burry consistently puts his money where his mouth is and typically makes significant sums of money doing so. These returns are comparable and on par with those of the world's best investors, but this does not imply that Burry foresees when the market will crash. He predicted the 2008 recession quite early, and he might do so again. He recently shared a 53-page article discussing the micro and macro elasticity of markets. You're probably confused by what these terms mean. Although the research report sounds complex, the idea is quite straightforward. Let's say an investor sells $1 of bonds and purchases $1 of stocks. Now, what will happen to the bond and stock market's overall valuation? A simple model would predict that the bond market would decrease by $1 and the stock market would increase by $1. But in reality, $1 invested in the stock market would actually cause the market to increase by $5. The logic behind this is quite simple. This happens because when individuals buy stocks, mutual funds are encouraged to do the same. The research report's mathematical models predict that if $10 are invested into the stock market right now, it would increase the overall market to $50. But this 5-to-1 ratio is not always constant. It might reach 100 to 1 or turn negative to -5 to -1. Since market valuations are so high, a small negative event could cause a massive crash to occur in the future. Although no one can predict when a market crash will occur, almost any negative development can cause a crash. The market is on a knife edge, as evidenced by the S&P 500 reaching record highs, the Buffett indicator reaching its highest level ever, and margin debt soaring. One negative move could trigger the biggest crash in history, and that incident might simply be the collapse of Evergrande. But what is Evergrande? It is the most impressive real estate company that owns over 1,300 real estate projects in roughly 280 cities in China, but it is also the most indebted real estate developer in the world. The company has borrowed more than $300 billion in loans and is currently defaulting on its interest payments. It recently reached an agreement for a $35.9 million interest payment, but it still has one repayment of $83.5 million coming soon. Its management team is trapped and has already begun to repay investors with real estate property. Why does this even matter? To begin with, it is more than just a developer in China. It is a company that has lent out billions of dollars globally, including to Citibank, Morgan Chase, UBS, HSBC, and Bank of America. If all of these banks experience sudden billion-dollar losses, they might stop making loans and cause the financial system to become frozen. One of Evergrande's affiliated banks is under investigation for allegedly making illegal loans of up to $20 billion. Isn't that huge? The question is, who is the sole owner of this $20 billion and who is the borrower? Many people believe that it's Tether, an asset-backed cryptocurrency stablecoin company. But no reputable borrower would ever do business with Tether because it is very shady. And even if reputable borrowers did do business, they wouldn't borrow tens of billions of dollars unless they truly needed it. According to Jim Cramer, his Chinese sources claim that Tether's commercial paper is Chinese and that the company is a ticking time bomb. So it is possible that Tether may be lending substantial sums of money to Chinese real estate developers, especially Evergrande. The collapse of China's real estate developers may prove bad for the entire world because the fact that tens of billions of dollars are currently invested in Tether and that its collapse could potentially wipe out the entire financial system is very scary. Evergrande's failure could signal the collapse of not just one real estate developer, but the entire financial system. However, that's just my opinion. Let me know what you think in the comment section. As always, thank you for watching, and if you like this video, please hit the like button and subscribe to our channel. See you in the next video.